Hello, everyone, and welcome to this week's episode. Today I'm joined by Harriet. You know, we love to talk about central banks, and this week we're talking about the People's Bank of China, who have interestingly actually cut key policy rates over the last 2 weeks. So, Harriet, what has happened?
China's monetary policy uses several different interest rates to help shape financial conditions within the economy. Last week, the PBOC cut the 7-day reverse repo rate and the 1-year medium term lending facility rates. And then this week, the PBOC cut the 1-year and the 5-year loan prime rate to guide effective lending rates lower. And all these measures are attempting to reduce the cost of financing, revive loan demand, and spur on and facilitate economic growth.
So, this means China, the second largest economy in the world, are at odds with the rest of the world who are actually hiking interest rates. So, why is the People's Bank of China cutting rates, and have these moves been a surprise at all?
In short, China's growth has been slower than expected. Despite the unwinding of COVID restrictions 6 months ago, we did see a rebound in Chinese growth, but it hasn't been sustained. And that's meant that Chinese inflation, in contrast to other parts of the world, has remained very low. In light of the weakness in activity, measures to boost growth have been expected. Um, and the expectations of easing policy have been growing as the data over the last few months surprised to the downside and indicated that multiple sectors across the economy have been struggling. And in particular, the old engines of growth in China, the property sector, which accounts for about a quarter of activity, and infrastructure are no longer providing the boost to the economy that they used to.
Ah, that makes real sense as to why China are cutting rates compared to a region doing the opposite then. So let's change gears for a second and let's talk about markets. So, how did markets respond to these cuts?
Well, while the cuts were expected, the market participants had been hoping for a 15 basis point cut in the 5-year MLF rate, as this is the rate on which mortgages are based on. But in the event, rates for both 1-year and 5-year were only cut by 10 basis points. And this led to some disappointment, and China's equity market was flat following the announcement, with shares in the property developers leading the losses.
Ah, that's really interesting. So that just begs me to have just one final question. What would you say are the key takeaways from this announcement?
The key takeaway, I would say, is that policymakers recognise that the post COVID recovery is not as strong as they were hoping for, and that the Chinese economy requires additional support to keep growth going. Further policy support could be announced, such as tax cuts, infrastructure projects, or a relaxation of property market restrictions over the rest of the year. However, we observe that many of China's growth challenges are becoming more structural in nature, and therefore we see more headwinds than tailwinds to growth in the near term. And it's unclear, therefore, whether current policies will be sufficient to maintain growth, and ongoing geopolitical tensions in the region obviously add to the risks.
Yeah, I mean, it'll be interesting looking forward to see how much further policymakers are willing or even indeed required to go in China to help boost their economy. Thank you, Harriet. Really insightful as always. And thank you to all the viewers this week. We'll be back again next week, as always, with another topic of interest.